Hey, welcome back, everybody. I am incredibly excited to welcome on our next panel. Are we okay on the... Yep, excellent, thank you. On how to get funded for hardware. I think this is an incredibly exciting session, one that we, like a lot of the conversations that we've had and the pitch competitions we had, is really trying to address that topic. So I'm really looking forward to this conversation. I'm going to invite my guests up and then we can take a seat and introduce ourselves. Come on up, Jennifer, Puneeth, and Gabriel. Excellent. Okay, well, hey, we have just come out because we were judging the Accelerate contest, and we I feel like this is going to be a continuation of that conversation because this is exactly what we were talking about, is how to do this. But I want to start with just maybe giving a little bit of context to the audience. I know we kind of did a little bit of an introduction during the pitch competition as to who you were, but I'd like to go into a little bit more depth. So if I could have you just talk through your firm, what sort of investments you make, stages, etc., and any other notable investments specifically in hardware. Okay, yeah, we'll start with you, Gabriel.
Right.
Yeah.
So I'm Gabriel, as I noted earlier. I am with Elemental Accelerator. We are an accelerator based out of Honolulu. We've been around for about 13 years. We're focused on climate tech, and actually more broad than just mobility. We invest across a variety of things in food and agriculture, water, circular economy, mobility, and energy. The portfolio is about 133 companies or something like that. About 70 of those fall under the mobility and energy category. And to your question around the hardware and mobility side of things in particular, the most relevant to this room, actually, Michael Keating's here, but the founder of Scoot. Scoot was one of our portfolio companies before they obviously sold to Bird. Remix, which touches the space software company, got sold to Via, but they were one of the portfolio companies. But then we have things that span across electric trucks, electric buses, so Exos, Proterra, both those went public last year. We have companies doing sustainable aviation fuel. We've got companies working in hydrogen aircraft. So kind of across the board. And we think about things, I think, pretty agnostically in terms of the thing. Is it hardware? Is it software? It doesn't matter so much. But is it solving for climate tech? Does it particularly work with frontline communities? Are there traditionally excluded founders on the team? And really thinking a lot about that. So that's kind of our thesis and our approach.
Fantastic. And just actually before we keep on going, so your background before you were there is also interesting as well and particularly relevant for this conversation.
Yes, yeah. I've worked in mobility a bunch, energy, various other things. I guess most notably I was on the founding team at Lime, so I helped build that company, working in government relations to open markets all across North America, and left after 3 years. I was the head of data policy and transit partnerships globally, so I was working with cities and agencies all over the world to try to figure out how do we do data sharing in an appropriate way, in a safe way, in a legal way, in a way that respected our customers. Also working with transit agencies to figure out how do we partner better with them. And after I left Lime, I did some advising and consulting work with Super Pedestrian and also worked with Spin. So I've gotten to play in the industry a bunch, trying to collect all the badges and get it, the passport full.
Get everybody.
But yeah, it's
awesome.
been fun.
Marvelous. Thank you. Puneeth.
Hey everyone, my name is Puneeth. I'm a senior associate at Trucks Venture Capital. We're a seed stage fund investing in transportation. Now for us, our core thesis is around making transportation safer, decarbonized, and more equitable. And so that's really what we look for when we're investing in any company. We've invested in about 55 different companies. And for us, the scope of what transportation or hardware means is quite broad. We've invested in everything from scooters up to satellites, trucks, planes.
Yeah, it's not just trucks.
Everything.
You should really rename that Not Just Trucks VC.
Trucks and Co.VC.
Yeah, excellent.
So hi again, everybody. So I'm from InnoEnergy. It's a European climate tech investor. We have ticket sizes between 250 and about 8 million. We invest in sustainable energy along different verticals. So mobility is just one. We love hardware. We love crazy people, crazy ideas. So for example, some years ago, the topic was, can we do green battery production in Europe? 3 years ago, everyone said no. Now we're doing it by building up the entire value chain. So green cell manufacturing, mining, everything else. My biggest thing at being at conferences like this, because we're quite active in this space, is please, let's not just be the riders of micromobility, but please let's also create the value chain to have jobs and everything else created along this whole thing. So that's part of our investment thesis as well.
fantastic. And I'm looking forward to digging into that. But I think maybe what we can start with is, what is hardware? When we're talking about hardware, I mean, I think one of the things, we've just had obviously a number of companies come up and talk about like their vehicles, and some of them have been scooters and some of them have been bikes and all that sort of stuff. But I think that is probably slightly constrained if we think of those as the only things that we talk about when we say getting funded for hardware. I'd love to put that one to you, Puneeth, and then either of you as well if you wanted to follow up. But when you think about hardware, just because you've made a number of investments specifically in hardware in micro, what constrains it? Like, what do you think is, where do you delineate, yes, it's hardware, and where it's not hardware?
Yeah, I mean, I think really in the transportation industry as a whole, almost everything can be considered hardware, and at least we consider as hardware. Because even if you're not manufacturing your own product, you're probably integrating with physical systems, you're managing, you're organizing physical systems. And so, I mean, I would say most of our portfolio is hardware by that definition.
Yeah, fantastic. Anything else that either of you would add?
I'll say one thing. We're a nonprofit accelerator, and I think one of the things that's kind of interesting and fun about being a nonprofit accelerator is we can really look for the mission. So we're trying to fulfill a mission, which is climate tech, traditionally excluded founders, and if a piece of hardware needs to come into being or needs to be built into the world because it will support business models or changes that we need to see on our streets, we can really go after that. So to me, that's everything from thinking about charging infrastructure, storage for micromobility devices. It's not just the devices, which we've seen a lot of. Shabazz Stewart was here from Uni. He's talking about where do you put these things, which I think is just a brilliant question to be asking and trying to figure out how to solve. And to me, hardware, it touches all of this, but if we can't figure out all of those pieces, then the stuff starts breaking down. I mean, you heard it. Carrying scooters up to apartments and stuff, we got to figure out ways to charge, to store, to make this stuff all work.
Yeah, fantastic. So one of the things that I've noted in this industry, so I as running the Micromobility podcast, I'm also an investor as well, and I've invested in a number of hardware companies. And one of the things that I've really picked up over the last couple of years, and over the 150 episodes of something that I've done with a lot of founders in the space, is that oftentimes venture capital, the frame of venture capital in terms of how funds are structured, what their returns need to be, what their return profiles need to be, etc., isn't always necessarily well mated for hardware. And so I can give a couple of examples of okay, so you've got Van Moof and Rad Power Bikes, who obviously just raised a fair amount of capital. Though that would be more like private equity by the stage that they kind of got to. Van Moof, as I mentioned, kind of started off again ended up in private equity, and that's how they've funded a lot of their stuff. Cowboy, again, European, but they managed to get venture capital funding. They're they almost feel like exceptions. Like, I've seen a lot of other companies that have, like Apollo Scooters here or One Wheel, oftentimes bootstrapped their way through. And I'm very curious for you whether or not you think that venture can work for hardware, specifically hardware and micro, and why or why not. And I'll put that to all three of you. You can, whoever wants to pick that one up.
Yeah, I mean, I think venture can work for hardware. At least I hope so. Otherwise, our fund is in a lot of trouble. But I mean, yes. I think one of the things that you have to keep in mind is that there's different purposes for venture dollars. To some extent, the model for venture is when you're increasing your spending, let's say in a linear way, the kind of revenue is growing in an exponential way. And not everything in hardware works that way. And so there's some tasks that you as a hardware company might be doing that are probably better suited for debt financing or credit financing, whereas there's other pieces of it that are better suited for venture. And I think, a lot of tech companies typically just look to venture as the only way to fund your company, but hardware companies need to realize it goes back to being a portfolio. And sometimes you might need to raise debt funding on less than favorable terms as a means of getting equity funding, which then gives you better debt funding. It's all kind of, it's like you're trying to get across a bridge and you're jumping across all of these different stones to get there.
Yeah, fantastic.
Maybe I would just add to that. So that's one core piece of how we believe we can support this industry is by bringing all the different players to the table. So that's what we did in these other cases, with cases of two founders in a PowerPoint wanting to build a gigawatt factory plant, is we say, okay, who can we get to secure hundreds of millions of offtake agreements so that we can make them bankable, and then what do we need to do with the regulations to shape them so that this is creating a level playing field, I would say. And so it's putting all those players together, but then putting skin in the game. real skin, this is business, and then showing that this can be an economically feasible solution, but you can't just leave the startup on their own and try to get just VC cash. You got to bring everyone there and say, like, let's show the trajectory of this, and everyone is going to put in risk, and then you go.
Yeah, and so, I mean, you go, and then, okay, because I was going to follow up with that, but it's just like, I can see that there is, for example, like Horace yesterday was talking about, look, this is the size of the automobility industry, like this is the size of the micromobility industry and where we think it'll grow to. And the conversations we've been having around in the last couple of days, like there's heaps of what feels like pent-up demand, and yet there's the gap in being able to get companies funded and across that kind of funding gap. And especially with COVID and all the supply chain challenges that we've had for the last couple of years, it's been incredibly challenging to be able to get there. So what are some examples that you could think of that would what that would look like in micromobility, like demand aggregation in bulk, that might help with the next stage of like helping a company get through that first stage in the same way that like you might have done that? How would you apply the Northvolt example to something in micro?
So one thing we think about a lot is the topic of operations, right? Where for a lot of these companies, it's a pretty big pain point on their P&L. And so, for example, if we can look in the space where there can be shared operations across different companies that are serving different segments, and let's say an anchor of that would be a landowner, right? So this landowner is going to work with you to host your e-bikes for the gig economy. It's going to host the cargo bikes for Puneeth, who's serving UPS, and whatever. And that landowner then starts to aggregate all of this and then open a door. And when you have that agreement there, that's just one example. Or a financial institution who says, we'll offer leasing for your hardware. But for us, it's about finding the integrated offerings in this segment. Right now, it's, for me, just a little bit too fragmented. Everybody is kind of on their own path. And there's so much that can be done from a shared perspective of infrastructure, asset utilization, and things like that.
And actually, if I can build on that and touch back to the previous question, one of the things that we were talking about earlier was universal batteries. And right now, if every company has to develop every component themselves and the things don't interoperate, interchange, it's expensive for everybody, which means the costs go up. Whereas if you could develop an interoperable battery, for example, that works for all of the providers, that reduces, right? So you can suddenly develop these economies of scale that the auto industry has already figured out years ago. They've got, their tier one suppliers, and they do all that stuff, right? And I don't think we've seen yet that kind of consolidation or movement, although I know you're specifically leading up a piece on that, which is really exciting. Yeah, and I know Yamaha is like doing the swappable battery that it's going to be universal, and it's like Yamaha and a bunch of other companies that are going to have this universal battery that in theory should work across any moped, right? Yes. Yeah, I get that. I think the other thing is getting more creative around how we fund things, and I think there is appetite right now, in particular Europe and the US actually, there's a lot of movement toward climate tech, and a lot of that is looking at, okay, what new funding models, because a lot of this is capital intensive, right? If you're looking at energy transition, you got to build stuff. This is real physical things, and we have to get more creative. And so some of the things we're seeing is also bifurcation of companies. So we've got the operating company that has assets and has to go after some kinds of debt or whatever, to your point, of different stacks of funding. And then you've got others that are a more asset light side, and it's maybe two companies but running the same show, right? Or we've got, like, for example, there's a company, Enduring Planet, that's doing revenue-based financing. And so they're looking at how can we take what you've already got and build on that. And just different approaches to capital, I think, which is interesting and also builds on some of that partnerships. Yeah, absolutely. I'll come back to that one. So one of the things, Jennifer, that I really want to pick your brain on a little bit is that, if you look at historically, like how industries have developed, so like the car industry or even kind of early mining or kind of early vehicles, especially planes, etc. Like, if we were to think of these as like parallels to the industry development, in the early days, there was oftentimes like tax incentives or really good programs that were put in place that allowed for those developments of those industries. And I'm specifically thinking of cars and the fact that like there was urban planning that assisted in the development of all these things, and we went out and funded interstate and all that sort of infrastructure on the back of the ability to be able to support those companies. How can we get micromobility better wrapped around and supported in this space? And then I'm going to come to Gabe to ask specifically about the US criteria, because I know that he's got something to say about the IRA.
Number one, we have to be able to communicate about it to the players who are writing the regulations and the legislation, right? What does this mean from a CO2 perspective, from a lifestyle, from a space, from a job creation, in numbers, what does this mean? And I think that's again connected to the hardware part of it and building up the supply chain. We're not just talking about 5 billion riders. In Europe, we're talking about 1 million jobs that can be created. So that's the number one. Number two, what we find, because we're working a lot with the European Commission, is they don't even know what to call this. Like, what is all this stuff? Like, is this a two-wheeler, a three-wheeler, four-wheeler? Like, is this micromobility? Does that cover e-cargo bikes for delivering Heinekens in the city? Like, what is all this? What's the Eli? And what is the infrastructure that we need? And so because of that, the subsidies are missing. The level playing field with cars is not there. And so we also have to figure out, as enthusiasts or experts in this field, what the heck do we want to call this? What do we need from them? And then make sure we're putting it in there.
And I think the other part, I mean, it's so interesting to hear you say that, because I think, like in New Zealand, where I'm active and have been talking to the government a lot about micromobility, it is that exact question. It's like, well, are you just talking about scooters, or are you talking about cargo bikes, or are you talking about all these things? And then I'm like, oh, and actually these vehicles can go up to the size of an Eli, and they're like, well, you know, what do you expect? It's a very hard question for them. And I don't think we've been particularly good at communicating the straightforward, like, hey, just build more bike lanes and or do these one or two things that are simple to understand.
And I would say too, we don't just need a bike. I want 3 lanes.
Yeah.
Right. We need 3 lanes, not even just a bike lane. If you look in Barcelona, I mean, it's dangerous now. I mean, they've got all sorts of cargo bikes and scooters, and I love that everyone's developing super fast and high performance, but in the city, those lanes are full. And they're crowded. I mean, we need really safety and things that keep you going at the same speed. I don't need a faster one that's tilting all over the place. I need to be kept safe with maybe more mirrors for the guy who's about to pass me.
I think one thing to add to that is one of the big issues that micromobility has had thus far is there haven't been big enough organizations or companies that are going to the government to help push some of these changes. And I think that's one of the great things that the shared operators have done. They've kind of amassed the volume required to get people to listen. And they've helped push some initial definition.
How's that policy going in Lyme, eh?
And so I think it's a bit of a matter of time as well. One of the other things that we've noticed with some of our portfolio companies in other areas of transportation is partnerships with existing large organizations can really help with this as well, especially if you're building a commercial vehicle. Partnering with some of the big logistics players who have that muscle and that experience of how do you work with regulators, how do you kind of lobby for these certain incentives. You need volume and you need kind of the loudness in that voice to be able to affect that.
Yeah, absolutely. Yeah, I want to go into the IRA, because I know that, and when I say the IRA, I'm not talking about the IRA from Europe. I'm talking about the IRA, Inflation Reduction Act, which just got passed, because I know it's one of these things that, like, early on it had the e-bike act that was attached to it, as far as I understand, and that was looking at funding for two-wheelers that would have provided that extra government subsidy that I know Olaf was calling for earlier, about like helping just reduce the friction in that space. That would have helped, obviously supercharge this area. Talk me through what happened, and then where it went wrong, and what can we do to help better that.
I feel like I got to break into song. I wish I was in the room where it happened, but I wasn't. I don't know what happened. What I do know is the Secretary of Transportation was the mayor of South Bend, Indiana, when we launched our first medium-sized city, Lyme. It was our 3rd city anywhere. Key Biscayne and Greensboro were the other 2. Pete knows it, right? Like, he bikes, he knows this space, and yet when the Inflation Reduction Act passed, there's no support for anything that's not a car, effectively. Yeah. And there were a lot of public comments actually on the recent EV charging side of what Biden pushed through, specifically saying, hey, EV charging, if the federal government's going to get involved in building this stuff, it should also serve things that aren't cars. So people are commenting, but for whatever reason, it's not being heard. And I actually think it's because, to your point, they're getting big enough-ish, but not really. Like they're still a drop in the bucket, and frankly, all of us are still fighting for table scraps when you compare it to what the OEMs of the car industry, like what the car industry has, right?
Yep.
And doing government relations at Lime, we were always fighting for that little sliver. To your point, like give us just a little bit of land here. We just want to play a little bit. I was in a state working with the state legislature to get scooters legalized in that state. And legalized was simply defined. So we had a paragraph, and I spent months working in the state to get this paragraph inserted in their state code to define what a scooter was, because they were asking the question you're asking, which is
Right.
What is it? Like, What does it weigh? How many wheels does it have? That kind of stuff. The one group that testified against us was the bike community. And the reason they did it was actually because of what you're talking about, which is, hey, these things go too fast, they're too big, and they're going to be in our space. And we have fought tooth and nail to get the very little bit of space that we have.
Yeah.
And so you are going to come along with your VC-backed model, and you're going to take that space away from us. And I think what's happening is we haven't yet figured out that we need to be bigger together. We need to work together. And I mean, it's heartening to hear you say that that's a struggle in Europe, because I look to Europe and I see just leadership all over the place, in part because you have cities that are built differently, right? And that's just history. But I actually don't think the industry yet sees itself as a big enough player to be in there swaggering around DC saying, why does the IRA not include e-bike subsidies?
Yeah.
Why is everybody not doing what Denver's doing on steroids, or what a lot of cities in Europe are not doing?
Yeah.
Anyway, rant ended.
Yeah. So thank you. I want to come back to you and like take it from the, hey, we're talking about policy and big level stuff, to the why, like of the firms that are on the stage, like you guys have been in climate tech. You've been you're one of the oldest climate tech players. And when I look at the list of portfolio companies, like there's only one or two micromobility companies that you can kind of say, yep, these were the ones that we went after. And I'm curious because you obviously are thinking about it. This meets all the criteria for you. It's it's climate impact. It's a vehicle that you probably could look at and say is going to have a decent business behind it. What's happened? Where are you at on?
Yeah. So I mean, somewhat you're talking about history, right? So 10 years ago, micromobility wasn't a word yet. We didn't have this stuff. So we're, as one of the oldest climate tech accelerators, we don't have, that wasn't a part of the history necessarily. I think then what happened, certainly when I was at Lime and when we were growing as an industry, we were looking to VC, and we were looking at VC as the funding mechanism because we'd seen how Uber and Lyft and others had done what they did, right? So I think that's part of it. Is Elemental is a small check relative to a lot of the folks that underwrote. A16Z led our first round, and we went bigger from there. So I think some of it's just like small check size. Is it relevant? Can we find and pick the one that's really important to pick? What I've been looking at, and I'm really excited about some of the companies that we've been working with, is how do you enable this industry? We're not going to build the next, whatever, Specialized or Gary Fisher or something like that necessarily, but how do we enable things? So I was talking earlier about storage, about charging, thinking about curb management, thinking about business models that enable more people to ride these things. One of the questions you asked was, well, I can't lift that scooter. That means that's eliminating a whole bunch of people who can't use that device. So how do we support that? How do we enable more people to use these devices? Is it a business model? Actually, front row, Dan, like Lug and Carry is doing some really fascinating stuff about providing access to cargo bikes to people, and they're getting amazing uptake. So how do you enable that sort of stuff? That's really exciting to me.
Yeah, awesome. Puneeth, you're coming at this from a mobility tech perspective, and yet I also think, and this is a conversation that we had earlier as well with Julia and asking the question of the other mobility VCs, but it's like we still haven't seen that much funding relative to the amount of there's been tens of billions of dollars, $80 billion deployed specifically into autonomy and just trying to build autonomous cars, which I love and I'm really excited when they come, but it feels almost like we're fighting for table scraps here for the micromobility funding. How do you think that changes on, specifically for the mobility funds who are looking at the space for getting funding specifically into hardware?
Yeah, I mean, I think the challenges of raising hardware or funding for micromobility companies is, number one, a lot of funds that did invest in the early kind of shared operators have been a bit burnt by the less than ideal outcomes.
Why? What happened? I don't.
And so I think that's left a bit of a sour taste when new micromobility ideas are going to investors. The other problem too is micromobility is often consumer facing. It's often hardware and capital intensive. And so you kind of have this triple whammy that you're trying to fight when you're going to a more generalist investor. I think one of the other problems too is some of the benefits of micromobility you still need to kind of clarify the message of what that benefit means. And kind of the climate impact is really interesting. Especially in the US, there's not an immediate kind of replacement that micromobility does, right? It's not like you're kind of thinking about increasing ridership and taking away space from cars and putting more people on bikes. And it's hard to quantify what is the impact of doing that from a climate perspective. Whereas, let's say switching to EVs versus ICE vehicles, you can very easily say, this is the number of cars, this is how much gas they consume, this is how much we can save. Obviously, this is all napkin math, that's not necessarily entirely accurate, but immediately it's easier to quantify that impact. And so I think clarifying the messaging around the impact that micromobility can have, a lot of early micromobility has been a bit of like selling the vision, selling the dream. And I think we're starting to see more numbers, and when people are pitching, you need to point to that. You need to point to places like India and the rest of Asia where micromobility adoption isn't a question, it's just a way of life. And you need to point to that and show how we can get there, and you can use the numbers there to really give strong foundation for the argument here.
Yeah. Or Paris, for that matter. It's been amazing to watch that transition, and I think it's certainly interesting those early companies that I think got funded are the ones that are really benefiting from all these changes that are happening. And actually, I want to come to you, Jennifer, about this, because one of the things I've really noted is that directionally in a lot of cities around the world, especially in Europe, and Europe's definitely leading the front here, is this like, hey, we're going to start banning cars from CBDs. We're going to be building better bike lanes. We're going to be building better infrastructure. Like directionally, micromobility is like heading for it. It's like it's all of these things are coming together. And yes, you've got the NIMBYs who are fighting to like have their car parking space right outside their house, not taken away, which they don't pay for. Again, rant over. I do think that there's like push regulations that are going to make it beneficial to make this industry grow, and like as we shift away from the way that we've done things in the past. But there's also the pull stuff. It's what's the stuff that we can be using to pull. So how do we get the incentives aligned so that we get the push and the pull happening at the same time?
Yeah. So just to come to this point, we invested in 13 different vehicles in this segment. And the thesis is that there is not one vehicle like the car and all these other things that is going to serve every use case. And the pull for us is the efficiency or the comfort, right? So when it comes to B2B logistics in this segment, what needs to be transported? What are the KPIs? Then redesign the vehicle for that use case. So actually, I'm a little bit turned off when I see a vehicle trying to design for too many use cases. I don't think in our portfolio with those 13 vehicles, all 13 will win, but we're trying to push the message. It's not one winner. And also with the car, if we go just from a combustion engine to electric vehicles, and that's the end, then we did not win. And in this segment, let's not just go to electric drivetrains, which is great and needed, but let's do purpose-built vehicles based on the use cases that create the efficiencies and the comfort for all those different use cases. So for us, that will create the pull then.
Yeah, I think I can't remember what's the name of the company that the e-cargo bike that you funded. That's
well, we have a couple, but we have Ono in Berlin, which is a containerized unit in the back then that can go on the public transport like the trains. But we have heavy cargo things that are based on moped styles. So it's just a lot of. We also have e-trailers that fit to any bike.
That's right.
Which then can increase the range for a postal company who wants to also do parcels. So it's just a lot of different things in there, and pick a use case in a segment. There's enough volume there because, as you said, the cities are banning cars, they're banning trucks. They don't care if it's electric.
Yeah.
So we need these form factors for a lot of different use cases.
Yeah. One of the most interesting podcasts I've done more recently has been with the EAV team, who are doing e-cargo bikes out of Bristol or near in the UK, and when Amazon announced the Micromobility Hub, they used the EAV as the thing. I cannot say that they had a deal. It's Amazon doesn't work like that. But when they were talking about the economics, they're like, we can do like 2 to 3 times the amount of deliveries as a normal truck within a city. Like the economics just win, and then it's like, well, if we can get better bike lanes, it actually makes us even faster. So all of a sudden, like you have those feedback mechanisms of happening. It's like you've got a pull and you've got the push, and I can see those things coming together and working. And obviously it then just makes the whole business, it reduces all the hair on the deals of everybody for what they're looking for. And I just think it's like, all of those things need to come together to be able to get those things funded.
I think to add to that focus on the use case also helps clarify, your value prop. And when you think about the use case and you design that vehicle backwards, you can now very quantitatively show what are the volumes, what are the number of people, what are the number of trips. Whereas if you are designing this purpose, general purpose vehicle, you're just pointing to magic and hand waving, right? So pick that use case, design the vehicle around it, and then now you can say, hey, I have this urban logistics vehicle and these are the deliveries. And that is a much easier sell than trying to sell essentially a smaller car.
Yeah.
And I think a lot of this goes back to something you said earlier around the industry and sort of swinging our voice around a little bit, is telling the story of the things that we're trying to do, telling the story that the problems we can solve, right? So you talk about electric cargo trailers, and I still have a job to be done. I need to get this thing from here to there. And if I'm normally using a truck, but you're telling me to replace that, show me how my job can still get done. Give me the story and put the story together in a way that I can digest. And I don't mean me, the people in this room, because we're all the geeks, right?
Yeah.
I mean the people who don't think about this at all, who get in their car out of default because it's sitting in the driveway or in the free space that they should be paying for out in front of their house. But put it in front of them and help me figure out, I still have jobs to be solved. I've got to get the kids to school, I've got to go grocery shopping, I've got to pick stuff up, I've got to move stuff. Solve the problems for me and help me understand how that happens, and then it flows.
Yeah. Now, I'm conscious we've got about 3 minutes left and I got way more questions, so damn. So I want to go specifically to a question that I have around novel funding mechanisms, because I think this is one of the things that we've seen is we've got a couple of companies that have tried to, Rad Power Bikes got its start from doing an Indiegogo campaign. We've seen other companies that have, for example, done or custom manufacturing solutions. I'm kind of curious, have you seen any models for being able to get funding, hardware funded, and through that first kind of challenge of hey, we've got a vehicle, we think it's interesting, we think we've got a use case for it, we're pretty confident on it, and then being able to get that to production without destroying a cap table in the process? Have you seen anything that you think is really interesting that's new or up and coming?
I think a lot of it is some of the usual suspects that we talk about, doing Indiegogo type pre-sale, debt or credit financing, and obviously venture funding. I think one of the benefits when you focus on that use case first is you can generate pre-sales very quickly. You see this everywhere in tech. People are able to generate pre-sales before they even really have a product, and it's just an idea. And I think that's okay. Use that to show that you have some demand, you're solving a problem in the market, and then you can use that to kind of as a proof point for other things that you might be trying to raise. So maybe pre-sales help you raise venture helps you raise debt, and you can kind of bounce back and forth.
Yeah.
I think that portfolio management, as I was saying earlier, is really the most creative thing that hardware companies can do.
Yep, fantastic. Anything else that either of you would be pointing to?
I'll just point out an example, which is Tesla with the Model 3, right? It was a year and a half or something before they ever delivered a car where they collected how many millions of dollars?
Yeah.
Brilliant move, and that paid for production.
Yes.
Oh, I think one other thing to add too is there are different ways to be creative about kind of subsidizing your R&D efforts. One example of this is there's a lot of tax benefits when you have R&D and tech teams in Canada, right? And that's one way to lower your burn in order to get some of this very expensive stuff out of the door. And so it doesn't have to be this specific grant or incentive that's marketed at micromobility. There's a lot of these types of options available for the tech industry in general. And so, borrow those for specific lines of your business that allow you to reduce the overall cost.
Fantastic. All right, we've got a minute left. I think one of the areas that I think we're starting to see is that there's large OEMs from the auto sector or others kind of sniffing around. Grape, which is an e-bike company, got bought by Porsche. What other companies, if you were to make a pick, ripe for acquisition, and who theory would buy them? If you had to pick one, we've got 30 seconds left.
I think a better question is, do you want to sell them to those companies?
Yeah.
Was that a good idea?
It's a great question. Yep. Puneeth?
Not a specific answer to your question, but I would love if Apple bought VanMoof.
Epic. Yep.
Oh, wow. Okay, that's a twist. So I've been intrigued by the European. There are a couple of companies in Europe that have been stacking up bike companies. Pone Group is one of them. I am intrigued by that. So if you look at, there's so many of us poking around at it and making really cool products like Turn, like stack it up.
Yep.
Make a full suite offering of all sorts of amazing vehicles, and then just scale.
Fantastic. Excellent. All right. Well, hey, folks, that's all that we have time for today. I really appreciate it. Jennifer has to go catch a flight, so I can't extend it any further. But yeah, look, we're going straight from here into Julia. She's going to be talking about climate action and the opportunities for micromobility. So with that, hands together for our panel. Thank you.